Hello, everyone. Welcome to the next episode of the PwC Tax Bite podcast series. My name is Pieter de Ree, Global Tax Director at PwC Brussels, and I welcome you to this new episode. Before we start with the episode, I want to invite you all to subscribe to this podcast series via Apple, Spotify, Google, or the PwC website, so you will automatically get all the new updates of this episode. In this episode, we will talk about green investments, green funding. It is a topic that comes up when I talk with various businesses. Also, with the pandemic situation we are still into today, but with the outlook of recovering from the pandemic, companies are looking into investments to recover. And some of these investments can be green ecological investments or socially friendly investments. And I thought it was a good idea to have a discussion on this topic with real experts in the field. And with me today, three real experts. We have Ivan Peters. Ivan is a partner in PwC Legal, or affiliated law firm of PwC, and he is responsible for capital markets and finance, both on the funding and the investment side. Next to Ivan, we have Reinout de Klerk. Reinout is an expert in ESG and responsible investments. He's basically the practice leader for this in Belgium. And Emilie Etundi is here with us. Emilie is a manager in our government incentives team. Her role is to support companies to secure funding to support their activities. So I think we have the right people in the call. And we have a very interesting topic to talk about. So as I already explained, well, the ecological challenges are, of course, enormous. We had a pandemic, we have a sanitary crisis, but with the sanitary crisis, still ongoing, but with a light at the end of the tunnel, a lot of businesses I talk with are thinking of how to recover from this pandemic and how to invest to recover from the pandemic. In the meantime, some very important challenges have been put on the table. Europe wants to be climate neutral by 2050. Huge challenge. So let's start with that perhaps and talk about a little bit the broader picture. And my first question is for you, Reinout. Can you share a little bit with the listeners how you look at these developments, the Green Deal? Is this really a topic which is on the agenda of business?
Thanks a lot for the question, Peter. It's absolutely on the agenda of our clients, and it's also logic that it's part of their agenda, because at the end, Europe wants to become the first carbon neutral continent by 2050, but by 2030, which is not so long anymore, it wants to decrease the greenhouse gas emissions by 55%. So if you look at this number, 55%, it basically means that you will need huge investments and a huge amount of capital to fund this transition to a low carbon economy, to fund meeting the target of minus 55%. The European Union, European Commission also has taken some first steps to make this funding possible and to make the reorientation of capital possible, and that's basically by developing the EU taxonomy. So the taxonomy regulation, it basically aims at providing investors with standardized definitions to help them evaluate whether or not their investments are creating an environmental impact, if they are indeed reducing emissions. So the taxonomy is, in my opinion, only the first part of a huge regulatory wave which aims at reorienting this capital.
Okay, thanks, Reinhard, for putting that broader picture. And I think that Europe indeed not only is putting challenges on the table and trying to come up with some regulations, also in the tax atmosphere. And the listeners will know that a lot is done about green taxes and border adjustment taxes. It's not a topic for today. We're more going to talk about the investments, but it's clear that also from a tax perspective, a lot will happen. But now also an interesting question that I receive when speaking with businesses is, well, we will have to play our role as a business to realize these objectives in Europe of carbon emission reduction. when you talk about investments, you also talk about financing. And Ivan, it's great to have you here because it would be really interesting to have your view on what are the typical challenges that companies are facing when they are introducing green financing and green investments.
Thank you, Peter. Happy to help clarify that. First of all, I would like to confirm that what Reinout was saying, the size of the challenge, it's indeed huge. And that's also what we are already seeing in the market. We already see in the market that massive amounts of funds already from lenders and investors are shifting towards financing of green projects. And that follows suit with the regulatory developments that Reinout announced. Regulators, legislators, asset managers, investors are pushing funds towards green financing and green projects. And that means for undertakings that still have to go some way in terms of moving towards sustainability and to green activities, that you have to urgently get going in making sure that you qualify for those funds that are willing to be invested in green projects. Yeah? And the development is pretty extreme if you see that in the last couple of weeks a number of lawsuits have been commenced against central banks because they're including the ECB, because they, with their funding, they were still making funds available for non-sustainable activities and non-sustainable projects. So this movement is going on, and each company has to make sure that they don't miss out on the opportunities of that development. In order not to miss out on those opportunities, I'll quickly discuss the key elements of a very typical form of green financing, the green bond, a very popular product and a key part of this part of the capital markets. We typically see that there are 3 steps you need to take as a company. The first one is to develop a green bond framework. That's the key part, and I'll go into detail on that. The second step is that you need to find a third party, an independent specialized party that will review your green bond framework to see whether that framework indeed allows you to be green in your activities and funding. And then the third step is more technical, is really putting the actual bond in place and selling it to investors. The first step key is the green finance or the green bond framework that the company needs to put in place. And that is really a description of policies and governance rules that support that you have everything in place to really make a green bond. And most importantly, that means that you need to make sure that the proceeds of the bonds will be used for real green activities and projects. It's not a situation of greenwashing. This is reality. And such a framework typically comprises, again, 4 elements. One is that you describe what you're going to do with the proceeds of the bonds, so the money you get from investors, and show that these will go into green projects. And that in the framework you describe how you are going to select the projects to make sure that, again, the projects you select and the activities you develop and select, that are actually green projects. A key element, in addition to just describing how you manage that entire process, is the reporting. Typically, you see that for green bonds and for these frameworks, companies provide for an annual reporting to show, okay, how did we put the money in which projects, and also report on the environmental impact of such investments. That's really showing to your investors how you're doing with the green bond. How to determine which project is green or not, then the capital markets have already developed quite some years ago what we call the green bond principles. That's really players in the market that set a number of standards through their professional organizations, and these being used quite often. Of course, now for the future, we will be looking to the EU regulations, the EU Green Bond Standard, which includes the taxonomy Reinout referred to, which is much more detailed, it's much more official, and it will also be broader in the sense that it will focus more on activities rather than on projects. So that will be the standard for the future. The second key element of the process is that you find somebody to give what we call a second party opinion, really looking at the green bond framework that the company has created and to assess whether that framework allows you to invest in projects and activities that we can truly qualify as green. And in the future, we will, for that exercise, be looking at the EU taxonomy. And this will result in what they call really an opinion document where the independent advisor will say, well, I've reviewed it, I've checked it against the criteria, and I believe that this meets the standard. And that piece of information will also be very important when you go to the third phase, creating the bonds, writing a prospectus for investors, in which you will describe inter alia how the green bond framework works, the details of that, and also the opinion that you've gotten. You will show to investors that somebody has given a rubber stamp to say, okay, if you follow these rules, these will be actually green projects and therefore green bonds. Something to keep in mind, certainly from an investor's point of view, those opinions and the fact that you have a green bond framework does not mean that if ever the company would not respect those rules, that would be an event of default for the bonds. It doesn't allow the investor just simply say, you didn't respect the rules, I want my money back. No, this is an indicative framework, and will be essential for the company to stick to it. But we don't want problems with the framework to trigger financial problems for the company or for the investors. And this may sound a little bit uncertain. This is the way the market works, and it works very well.
Thank you, Ivan, for clarifying that, and it reconciles with what I hear when talking with businesses. So the growing importance of showing your pathway to become more green to your investors, than the opportunity indeed to get financing for that all kinds of investments. Ivan, a little follow-up question. What is the main impact that you see for businesses of making the green investments? Is that really towards investors, or is that a real opportunity for financing? What is the main driver you see in practice?
Yeah, well, it's a combination of the two. I think the most important message is that it's not just an option. Perhaps first of all, I will say it's not the case. You don't have to do green financing because it's necessarily always cheaper. That's not the case. You do green financing because of your own strategic objectives, but also because the market is leaving you less and less choice. We see massive amounts of money and massive amounts of investors, certainly asset managers, pension funds, who are already today saying we have a clear preference for green financing, and we will get to a stage where it will become difficult to find financing investment for projects that are not green. In the US, we already see the first litigations of non-green industries starting litigations against banks, because the banks no longer want to lend to activities that are not sufficiently sustainable. So it's not purely an option. It should be an option to support the green objectives, but you have to be aware that more and more you will no longer have the choice. You will have to be part of it to have comfortable funding in the future.
Okay, thank you very much, Ivan. And yeah, I imagine listeners that are wondering how to realize green investments and how to build a business case for that are also wondering, well, are there any incentives available for this kind of investments? And I think, Emily, it would be great if you could share with the listeners a little bit your view on that. I think there are various local tax cash incentives available. Can you explain that a little bit for the audience?
Yes, indeed, Peter. There are lots of tax and cash incentives that are available both at member state or local level, but also directly coming from the European Commission. Those incentives are of two kinds, we can say. The first kinds are incentive that supports green investment of private companies in all sectors that want to invest to make green investment. for instance, that want to green their processes, to use renewable energy sources for their processes. Uh, for those incentives, for instance, in Belgium, we find each region as specific programs. For instance, in Wallonia, we have what we call aide à l'investissement en matière d'énergie renouvelable et protection de l'environnement. There is for Flanders the Ecologie Premie, but Belgium also offers a tax deduction for energy efficiency investment. So that's for the first kind of incentive. The second kind of incentives covers direct support to companies that are actually developing innovative low carbon technologies, processes, and products. So there we find companies that are active in circular economy, clean energy production, green chemistry, so on and so forth. So for those companies, there are incentives that directly cover the RDI activities. So there are various mechanisms, calls for projects that are directly available at a local scale. But the Commission as well has different programs that to support the development of low carbon technology. I think we can cite Horizon Europe, which is the main program, the framework program funding research, development, and innovation activities within Europe. It has started this year. It's going to finish in 2027, sorry. And almost more than 30% of the budget is dedicated to climate actions. So it's really going to fund climate neutral innovation. There is as well the Innovation Fund, which is another program which will support investment that are related to the commercial demonstration of innovative, first of a kind, low carbon technology in different area. So the focus is on energy intensive industries like chemical companies, steel producers, on carbon capture and usage, and on renewable energy and storage. And the last programs really focusing on R&D is the LIFE program, which aims at supporting the demonstration of eco-innovative techniques and approach with a focus on climate action, circular economy, clean energy, and nature and biodiversity. Uh, Maybe I can also add that within the framework of the EU Green Deal, there is a whole investment plan that has been set up by the Commission with instruments that are going to support the implementation of the Green Deal policy and therefore support sustainable investment in Europe. Uh, the first instrument is Invest EU, which is a special fund that is going to provide guarantees in order to cover the investment risk that are linked to super innovative and high risk sustainable investment, sustainable projects. Um, the EIB, so the European Investment Bank, is also going to play a major role in the implementation of the EU Green Deal policy by providing a financial instrument to support European companies in their green investment. And finally, some regions that are considered as let's say, lagging a bit behind when it comes to sustainable transition because they rely a lot on fossil fuel, for instance. They are going to get extra fund coming from the just transition mechanism so that they can provide grants or other instruments directly to the private companies that are located within those regions to support the green transition.
Thank you, Emily. Clearly, there is a lot of funding on the table as well, which is, of course, a very interesting point. If you are, as a listener, building a business case around green investments, you know how you will communicate with your investors, you have thought about your funding, well, then it's also important to look into incentives. It can create a real leverage, I think, on the investment potential and give the additional push that sometimes is needed to make a project with a positive return on investment. Emily, perhaps in a few words, can you share with the listeners also typically how, in your experience, companies are approaching these incentives, how they are dealing with that?
Yeah, well, I'd say that first, it's important that they anticipate, as for most cash incentives, actually there are deadlines, a whole process to follow, which needs to be started before the actual investment or before the actual activities. It's important to take into account this incentive characteristic of those. So the way it's usually done is first to screen what is available and to investigate the eligibility, which is often linked to the size of the company, to the specific investment or activities that are going to be made, um, to also assess the possible returns, because again, the size of the company, the location of the activities will also influence the funding rate and the return. And based on all those elements, then it's a matter of, well, optimizing how to best combine those incentives, and also reflect on how to build a strong case and be appealing to the funding authorities based on the overall member states of commission strategy. But yeah, I would say that the timing is key and the anticipation is key as well.
Thanks, Emily, for sharing that with the audience. That's very interesting on how to approach these incentives and so on. That brings us to the end of the podcast. That's basically what we had time for today. But perhaps before we close the podcast, I'm interested to ask you a final question, Reinout. We have focused a lot on the E of the ESG agenda, but I'm sure there's a broader picture as well. Any final words for the audience on this from your side?
Yes, of course, Peter. So as you said, you should not only look at the E of ESG, but at all domains of ESG. And I think that, for example, the IPO of Deliveroo has perfectly shown and demonstrated that also all domains are important. So in the case of Deliveroo, it was the S of ESG which caused some issues with the IPO. Also, when we assist our clients, for example, our private equity clients, they look at all domains of ESG, and they look at it from a value protection and creation perspective. Which domains of E, S, and G can basically destroy value? So that's more on the risk side, but also which domains of E, S, and G can create value, which is basically the opportunity side of ESG. So whether you are an investor or a company, you should basically try to identify which ESG domains are fundamental and key for the wider business strategy and process, and which can enhance or destroy value.
Thank you very much, Reinout. And with that, we come to the end of this podcast. I think it was very interesting to see how I think all of the listeners to this podcast one day will get the question, what can we do to invest in more green solutions, and what kind of incentives are available, and how can you organize funding. So I think hopefully this podcast was a first step in explaining the direction you could take here. Thank you, Ivan, Reinout, Emily, for sharing your thoughts. I'm sure if the audience have more questions on this topic, they can read more about it on our website or contact you for any follow-up questions. For the audience, I thank you for joining, and I invite you also to subscribe to this podcast on Apple, Spotify, Google, or the PwC website. Thank you.